Jacob here. I'm at the 13th hole at Lost Farms in northern Tasmania, around the Barnbougle complex, a beautiful place. We're here for another couple of days, but I just wanted to talk to you this morning very quickly about, should we be buying now or should we be waiting 6 months? Okay, this is a question that we've been coming up and we've been asked quite a lot lately, and I'll bring this discussion down to a number of key factors that drive property demand, and then obviously growth on from that. Okay, and I might give the example to begin with of late last year. We had great consumer sentiment. A lot of people were wanting to buy investment properties. Okay, interest rates were very low. We had the second ingredient of the formula, the magic formula. But serviceability, the banks weren't loaning money. Okay, in their applications they were being quite stringent. When we moved into COVID, obviously interest rates were still low. The banks hadn't really changed. It was only a couple of months. But consumer sentiment dropped very quickly. Okay, people decided to sit on the sidelines and not do anything. So then obviously property prices and demand didn't move. As we've continued through COVID, we've gone through periods, and obviously I am able to touch the heartbeat of the industry by acting as a professional, but then working with many other investors and other professionals. I'm always talking, okay? We're able to monitor the heartbeat of the industry. And what we saw heading into the Melbourne lockdowns were consumers regaining that sentiment. The banks had eased back the reins, and APRA, I guess, was put back in their box, but the banks were loaning and opening up serviceability. Okay, we started to see 95% LVRs. We started to see 100% of rent is classified as serviceable income. The banks were moving back all the barriers that they had in place. Okay, but consumer sentiment was starting to rise, interest rates was very low. So we had all three components, serviceability and assessments, sentiment and low interest rates, to cause a very buoyant lending, which people can access finance. Okay, happening very quickly. We're getting very interested in buying heading into the Melbourne lockdown, and then it's as if they all went to bed one night in a cold sweat and they thought, I better not be doing this, okay? I might put things on pause. And they did. And then we went through the Melbourne lockdown and people realised, hang on, we're getting through this as a country, we're doing a great job. Look at this cheap interest rate, look at this finance. Look, they're looking at all of our rental income. We're able to service, we're able to buy. And very quickly now, we're in a position where we have three things. Very strong consumer sentiment, they're very motivated, they're very bullish, we have low interest rates, and the banks are loaning money. Okay, there might be some delays in processing applications, I'll get to that in a moment, but generally they've eased back the reins, and servicing and bank requirements are very bullish. I'll step that back because last week our Treasurer did mention they are easing back lending restrictions. Okay, they're going back prior to GFC levels. All right, all the hoo-ha from last year and all the changes and the proposed changes and the Royal Commission, etc. It's all out the back door. Okay, they've cancelled it all, proposing. Okay, it hasn't got through Parliament yet. What this means though is you've now got a lending environment where, with all these restrictions removed, accessing money is far easier, and finance money is the name of the game in property investment. This is already causing a rush to the gates. Obviously, in day to day, I have a lot of dealings with mortgage brokers, okay? I said it before, finance is the name of the game, and mortgage brokers are your closest ally, all right? So in those conversations, people are flooding to the doors to get access to finance. They're looking at the lending restrictions, and once this goes through Parliament, it's basically going to create dramatic inflationary pressure on property prices. Essentially, the government is almost printing money and giving it to the banks, saying, hey, loan this money out. The banks are going, well, all right, I've got all these restrictions on how I loan money. I can't loan it out. And the government's saying, well, we'll take those restrictions away. You can loan it out. All right, so they're loaning it to people. People are then able to pay more to buy properties, and that's going to cause inflationary pressure on property prices. If 10 or 15% more people can access finance when they previously couldn't, you just move that money over to the value of property, and it's going to cause dramatic inflationary pressure on property prices in 2021. So when should we get in? Should we buy now or wait 6 months? Well, it comes down to finance. It's a great time to buy anyway. We're seeing a recovery of buoyant conditions, very good opportunities around the country, some not so good opportunities of course, but people are already lining up at the gates with their mortgage brokers. Banks are not so good at processing applications at the moment anyway. A lot of banks and employees are working from home still. Okay, so processing times have slowed down. You don't want to be at the end of a 3-month queue trying to access finance. We want to be right there, first and foremost, let's get those pre-approvals at least in the pipeline, and then we've got options. Okay, we don't want to be waiting 3 months in a line to get pre-approvals before we can actually go and purchase a property. You know, then we've got Christmas to deal with, etc. We feel the conditions are there to justify investigating buying a property now. Waiting 6 months, you might be at the end of a very long pre-approval queue with banks, and the government has pulled back the reins on finance and you're not able to access it. Okay, that's what we're really thinking at the moment. That's what we're seeing on the ground. I hope this has been useful. I've got a link that's just coming up now. Excuse my big fingers. That should be showing there on the bottom of the screen. This is a link to 90 minutes of work. I'm not exaggerating that. That says everything I know about property. It's packed in. It's a lot of content there. So, you know, stick through it. You'll get through it. Even if you come back in a couple of sittings, it's 90 minutes about our full process around performing due diligence at a local government area level across the country. Suburbs, streets, property, a 31-point due diligence checklist. It is all in there in that 90 minutes training. It doesn't cost you a cent. It's on demand. You can watch it on your phones. You can watch it on your computer when you get home with a glass of red. Okay, I'd love to hear your thoughts about that. If you'd like to join in the conversation, head across to High Performance Property Investment. It's a Facebook group. We're there, and there's now about 1,500 people who are very engaged with property investment, all having very interesting conversations over there. So have a great day. Signing off here from Barnbougle. Talk to you soon.